Welcome back to another episode of my trading vlog, where most of my views come from returning subscribers. If that's you, hit the thumbs up button. If it's not, consider subscribing. Remember, analyze, make a plan, follow the plan, no fear, no doubt. Let's talk about PLBY. I had time to digest some of the earnings announcement information. There is a lot here. I just cannot consolidate it enough. Really quickly, I want to go over the charts. You're going to see the big dive that occurred right after earnings, after hours, and pre-market even some action. And then a huge surge, which almost completely wiped out all those losses. Since then, we've seen the price slump downward and hiccup. I think, though, that if you look carefully, the volume is coming in at those lows and the price is trying to reverse. Something tells me that I think we could see some shorts closing their position. I think that the short positions would want to close here because the company just announced that they're going to be cutting a ton of costs, and they have a fantastic way of doing that. The business is being completely reorganized by Ben Kahn, the CEO, and I really agree with the way things are going. If I were holding short, I would look to start closing my position over the next couple of months. Reason being, on a technical basis, that this downtrend that you see here is starting to end in a falling wedge, an ending diagonal triangle in Elliott waveform analysis. Implied volatility is very high, above 260%. There is a triple bullish divergence in the RSI, which may break, and we'll see one more low come in, and I would expect that to be the all-time low before a big rip higher if the company can successfully reduce costs and turn a profit, which should be this year, but we probably won't see that reported until 2024. So this is going to be a long, sweaty hold for probably another 6 months, but that's okay. Until we break the 155 low that was set on April 27th, the targets I have at 217 and 239 remain valid. And I think that we're going to see perhaps those targets taken out. It could happen, right? We could blow at 155, then okay. Bleh. We start over again, and we just wait for this downtrend to end. This is a buying opportunity if you ask me personally. It's very common to see a breakout from a falling wedge and then the price retrace. Again, that 155 level is the money. We can also see the price hang out below 163 and above 155 for a few days, and that would also result in the RSI dropping and perhaps breaking that divergence, the bullish divergence, and reaching oversold. So we don't have to set a new low. If we do, we're going to get rid of these price targets. If we don't, we're going to keep them there. That's basically it. And so if you're holding short, that's pretty much saying this is where your bottom is going to be forming. This is where you want to start taking profits and closing those positions over the next couple months before the cost-cutting measures stop for PLBY because, well, they've now reorganized their business and it's not the same business anymore. It's a new game. So let's talk about what was said at the earnings. It was crazy. They mostly announced that their creator content business is still growing, 10% year to date. I want to just note that they have 1.9 million users on their creator content subscription platform. The GMV, they split that 80-20 with the creators. So it's 80% of the GMV going to creators and PLBY taking 20%. I don't know what their competitors' rates are at. I'll have to look that up, but 80% is pretty good. I'm really happy with that. They didn't receive any revenue from sales in China. That will come next quarter. I was very upset. I was kind of banking on that revenue from those licensed sales in China. And sure enough, not going to reach the balance sheets until next quarter. It's not that they didn't sell anything. They just renegotiated the contract. So there's going to be some more cash coming in, kind of like back pay. We'll see that later. I want to focus on some of the developments in the PLBY Group China venture. They clarified today or yesterday that the Douyin store is going to be working with Feng Group, with PLBY Group China venture, of course, at the top of that. So basically, this is what's happening. You have a group of administration staff from PLBY Group China venture. They are going to have a store in Douyin, which is TikTok, and Feng Group is going to be responsible for the manufacturing, fulfillment, and inventory of that product. So PLBY Group won't be directly handling the costs of running that business, rather just collecting a portion of the revenue via licensing. And this is the way the entire business is going. And in line with that, they have a new partner for the direct-to-consumer business in the U.S. as well. They've signed a contract or a deal. I don't really know how much paperwork goes into that, but it sounds like they're mostly through that process. They expect that to be closed June 1st, and Playboy Group will be taking a 15% revenue from the licensing in the US. Since the quarter started, since quarter one, they've signed 15 new license agreements, 13 of which are international. This is fantastic. This is saying that they are increasing their overall marketability through licensing, and the approach there is to reduce costs to Playboy directly by no longer being operators of those businesses. For instance, they sold Yandy, which attributed like $7 million of losses to Playboy in quarter one, right? Wow. So they sold it for $3 million, got rid of it, cut it off, get that out of here. They announced that they would be assessing strategic options for Lovers and Honey Birdette. These are two other companies that they have, which of course cost the company money because they are not profitable. By strategic options, I'm pretty sure what Ben Kahn's trying to get at is that they're going to sell these companies. He's very confident that the cost reduction will be greater than the losses incurred from these companies, and that will have a positive to neutral impact on cash flow for Playboy Group. That makes a lot of sense, right? It's not making money, let it go. Meanwhile, your licensing and your content platform is growing. So the company is making this big turn, this big shift. They no longer want to be managing these companies. They're going to be just the brand licensing and then have their content creator platform as well. And that's what they're going to focus on. They were able to refinance a ton of their debt, which it sounds like a honey, what do you call it, sweetheart? It sounds like a sweetheart deal. They were able to, it sounds like they were able to refinance a lot of that debt and receive $12 million in cash at the same time, which is amazing. This pushes back the amortization or payments due for those loans or for that debt till quarter one of 2025, which buys them about a year. It should take 3 to 6 months to see the effect of the cost reduction measures that Playboy is making in their balance sheet. This gives them a chance to make money between now and middle of next year before those payments are due on that debt in quarter one of 2025. The goal is, of course, to alleviate or sell Lovers and Honey, I believe, and use that money to pay down that debt beforehand. There's no Ben Kahn wants to, of course, pay that debt down and wanted to point that out. So the total debt was taken down from $216 million to $210 million. And that's still a lot of money given their current cash flow. So overall, I think that it's going to be another 3 to 6 months of sweaty hold. We could see one more low here, and I'm going to call that a buying opportunity. Playboy is about to cut costs tremendously, and as their creator content platform grows, I think we're going to start seeing some more cash flow into the company. And it might not be this year. It may be next year. It takes a few quarters for the reports to start showing the change there. And this is a drastic change that Playboy is making, turning away from owning these businesses to going to a completely capital light model, which is huge. To see the charts turn red like this is definitely just because of the reported loss. Long term, though, I think we are now looking at a real buying opportunity, which is what I was saying back here, right? But at the same time, some of those things that were discussed prior quarter haven't taken effect yet, but they will in the coming year. Whew. So it's going to be a long, sweaty one. I anticipate that I'll be buying shares as we continue to dip. Of course, I've decreased the size of my account, and I kind of want to keep it that way, but I'll be adding to it little by little. I'm just recovering from this trip to Hawaii that we made, which was a lot of fun. And I'm going to try to get back into these regular videos. Kind of a long one, but that's what I have. Playboy Group. Personally, I'm buying. I think we're going to see some positive cash flow. I'm out of here. Happy trading.